All right, guys, I am back again with another video. And in this video, I want to take time to do some analysis on Atom, cryptocurrency, Atom. I had a couple people asking me to do some analysis on that. And as I looked at it, I saw there was some good possibilities for this currency. So I wanted to do some analysis on it. So I'll be using Ichimoku. But again, I want you to understand and know that it's not just basically an Ichimoku analysis. It's really a market analysis showing you technical levels and so forth. So just because it has Ichimoku on it doesn't mean that it's solely Ichimoku, because we'll be looking at the wave price analysis and we're going to be putting that together. And we're going to also be looking at some levels where the market may start to move to the upside and some targets that we can look at. So I'm going to get to that right now, and hopefully you enjoy it. If you do enjoy it, please give me a thumbs up. Let me know that you like this content, and I'll keep pushing it out to you. All right, so we're going to get to it right now. Let's go. All right, guys, so this atom bomb, it may be ready to explode. So I'm going to show you where it could take off from and where it could go to. All right. So there's some good levels here. There's some good things that I'm seeing with this currency, and that's why I wanted to really do the analysis, because some of the pairs you look at and you don't see much happening right off the bat. But even though this is in kind of a retracement mode, it does seem like one that has potential for a good move coming up. Okay, so I'm about to show you what I'm looking at. So first of all, we're using Ichimoku analysis, but I want you to understand that when I start doing this wave analysis, that's not just basically Ichimoku. You can take Ichimoku off your chart and still do the wave analysis, because when I look at a wave, what we're talking about is the pattern of the market. And it doesn't have to be Ichimoku, because we're just looking at a wave like this. This is an N wave. All right, and that's what we want to see. And then right here we have a V wave. It's incomplete, but then it's going to form an N wave, quite possibly. All right, so we're looking for the market to do that move to the upside. Currently, we're in this stage, the V wave stage. This is your I wave. We have the I wave developed in a V wave, and then you get the N wave to complete the move. All right, so let's back it up real quick so we can talk about that. So starting from the low, all right, to the first high, that's going to give us this leg. That's going to be our I wave. All right, that's going to be your impulse move, basically. Then your correction is going to be part of the V wave. All right, and that's where that is right here. And then when we were here, we could have done our analysis to see where the market was going to go to. All right, and then we would have said that would be the target we're shooting for. So we'd be shooting for these targets. All right, but not at this level. We would have a different level. So I'm going to show you what I'm talking about real quick. Let me remove this stuff. All right, so if we said the market started here, it had an I wave and then a V wave completion, and then we're looking for the N wave targets. Actually the observation theory targets, your Ichimoku observation theory targets, price projection targets, then we would say, where's those targets going to be? So let me show you where they would have been from this level. All right. So from that level, I use my, I always use my tool here. So I use my fib extension tool, and that will always give me my N level. It'll always give me my N level. What's happening? Okay, there we go. I don't know what's happening. My computer is wacky at times. It doesn't want to listen to me. But anyway, we would be shooting for these levels. All right, so you would see like the main level, and the main level that's going to be on my chart is going to be this N wave. Okay, so let me show you here. It's going to be this N value. So automatically, if you use the fib extension tool, you can always come up with the N value yourself also. But basically what it's going to be is a measured move. That's what we know this to be, is a measured move. What we're saying is this is A, this low, and this high is B. All right. AB equals, so this is your equal sign. where the correction's taking place, equals C, which is this low, and then this high is D. So what we're saying is AB equals CD. That's a measured move, means it's the same length. It means this leg, AB, is going to be, CD is going to be the same length as this AB leg. So in the past, you look at that past leg and you compare that and you say, my current leg could be about the same leg or distance as AB was. So then my CD leg, once I get out of this correction, I believe it could be that same distance. Now that's not all the time. That's a measured move, and you can find that, look that up on internet, and you'll see what a measured move is, and that's part of Ichimoku analysis, but we don't call it a measured move. All right. So things that you learn throughout the markets are something else with Ichimoku. And if you don't even know Ichimoku, you're basically learning, if you're understanding a measured move, then you're doing part of Ichimoku wave price observation theory, okay, without even knowing it. But see, so this leg, so here's my N value. I always have the N value on there. And then like the next main level is your E value, because your E value is just this. Let me mark this on the chart. Your E value is just going to be this right here. Let's find this trend line. So my E value is going to be from this leg, which ends about here, right? So that leg right here that's the length of this leg. If I put this on top, then I'm saying that's where my next value is going to be, my E value. All right, so I would say my N value is there, and then my E value would be right here. So when I get into a trade here in this area, I know that the market could reach this level or this level. These are the main two levels that I'm going to be shooting for. All right, now, so where are we now? That's what really is the fact. What's happening now? All right, so where we are now, I'm leading up to that. Let me get some of this stuff off my chart real quick so we can show you. So I just showed you the past leg. All right, so basically I just showed you this leg right here. I just showed you this stuff right here. Right here. And I showed you where this entry, where the targets would be up here, right? And we hit those targets. So now I'm going to show you this leg where we currently are, and this low, quite possibly the low, we can hit where our next targets will be. So what you're looking at is just this. Let's just reverse this so you understand exactly. We started here, but now we're starting here. So that's the start. This is the new start. So we started there previously. This is the new start. We went to this high here, and we go to this high here. All right. So that's going to be the next start. And then we got a low here with a low here. So when we had these 3 points, 1, 2, 3, we were able to find the 4 target. All right. So now what we're trying to do is we're at the 1, 2, 3, and we're trying to find the 4 target. All right. So that's all we're going to do. So now we're going to go to that point, and we're going to see exactly where this could stop, because it could stop here. Let me put Ichimoku back on the chart so you may understand a little bit more if you're an Ichimoku trader. Put that back on the chart. So basically with Ichimoku, everything's bullish. We got a bullish bias because here's the things that make this chart bullish. You got a future that's blue. So your clouds are blue, blue skies above. You have a TK crossover that's bullish, okay? You have Chiku span above price and above the clouds. That's good. We broke outside of the clouds. We're flying sky high. And then price is above the cloud. So price is above the clouds. So these are all bullish signs. And that means we're moving ahead. So when we look at this now, let's figure out where everything is. So I like to trade off of structure, and I like to use mainly my fractal levels. All right, and I use the wicks to make zones. So what I'm talking about is this. The market likes to pull back to these levels. I don't care what market it is. It doesn't matter what market we're talking about. I could show you exactly what I mean. The market doesn't do it all the time, but it's one of the points that you're going to look for. And when you want to get into a trade, you don't want to, like, let's say we're trading long. We say, okay, so all of a sudden you guys see this, and then we're at this point right here now. And you say, I'm going to go long here, right? But what if the market drops all the way down to this point? Then you're in drawdown from that point down to here. Can you withstand that drawdown? All right, and then maybe it doesn't even turn around. So you have to have a level where you decide to get into the market. You shouldn't just get into the market. You have to have some kind of a level where you're deciding to get into the market. All right, so these fractal levels are going to be good points to get into the market. Kijinsen, flat Kijinsen is going to be a good level. Your cloud level is going to be good areas to get into the market, because these are going to be support and resistance levels for us, which could hold the market from coming any lower, and then we get in the trade at that point, and then it goes higher. All right, but if we just don't have anything to hold the market back, technically, then it could drop to the next support level. Maybe it drops all the way down here, and at that point, you got in the market up here, and you're hurting. All right, so you need to have a level where you're looking to get into the market, and then you have to have a level where you're going to definitely get out of the market. So what I look for is the market to break these levels. See this level here, broke that level. See this level here, broke that level, broke these fractals, and comes back to it. Let me prove it to you, because that's what we're going to be looking for now. All right, so if I say the market breaks these fractals, pulls back to them, that's my main trade. It's called a S-wave trade, and we'll talk about that more. That's part of Ichimoku. But here's the fractal level that we violate. Look where the market broke this fractal level right here, and it pulled back to it. That's where I'm getting into the trade. So therefore, there's another fractal level here, but there's also a fractal level here that could be relevant. So what I like to do, I like to make it into a zone. So I usually, if it's just one fractal that I'm looking at, the main level, I make this into a zone if it has a wick. So what I'll do is I'll create a zone like this, and then I'll look for the market to pull back to that level. And we're in that zone. So we could drop lower to the bottom of the zone, which would be this where Kijinsen is. Kijinsen is flat right now. So I'm going to take the zone off the chart for now. I'll put it back on the chart. But this is where in this area, we're looking for this atom to return to the upside, to explode out of this area and go past here and hit these levels. I'll tell you what these levels are and what they mean. But I just told you that the market likes to come back and hit these fractals after it breaks them. So I just showed you it here. So let's go backwards a little bit. Let's see if that really happens. All right, so now the market's coming to the downside here, right? So it's bearish. So now we're going to bounce off of the bottom fractals, right? So we're mark 1. And you could see, kind of missed this fractal right here. Okay, so we didn't quite get to that fractal on this move. But then this next move right here, we got to that fractal and it dropped. And I would have made this into a zone. So this would have been a zone right here. And you could see the fractal, the market came right back to that zone, as you see. So I'll have levels to trade, and those will be one of my levels. So let me back this up for you, because I want to make sure you see this. Let's back this up to this point so we could see good. So the market didn't come back like exactly to the fractal here, but it bounced off a Kijinsen. So that's one of my levels, right? A Kijinsen bounce. But the market, if you didn't know what to trade at this point, you didn't know what to do, and you're thinking the market's going to move higher, you have a zone right here from this fractal that you violated. You violated this fractal right here, and you pulled back, missed it here, and then pulled back, rejected it here, and then the market went to the downside. This is where I'm looking to get short. This is the same thing that we're looking at right now, where price is. So therefore, we're looking for the market to drop to the downside. So let me move back to where I was. And also, I'm going to go over here. Let me show you how these fractals could work for you. All right, I'm going to go just back it up a little bit. So here's a fractal right here. So this is, I can go back as far as you want, but I'm not going to go back that far. Here was a fractal right here. Market broke, came back to it, and then you go long. You got that bounce right there. So that was one. Let's move to where it's moving higher. So every time the market breaks a fractal, I mark it. So we broke this fractal, and then it was a zone. So I marked this as a zone. We broke this fractal right here, and then we pulled back into it, and then we go long. All right, and then we created another fractal. We didn't quite pull back to that fractal, but then we made another fractal right here. So we pulled back to, we broke this fractal, pulled back, and then went to the upside. Now we had a nice fractal level here. This was a nice zone. We would have made this into a zone. We would look to trade it. And then we might have thought this was no good because we dropped below. And therefore, that fractal, I would call that not all the way valid. And then we didn't catch this fractal either. This one, the market didn't quite pull back to it. Now the move was immediate, the immediate pullback. You could see where we had one break above, came back, and then touched it here, and then took off and never came back again. So this level was a valid fractal bounce level also. As you could see, we moved this to the fractal. The market broke the fractal, went higher, dropped, touched the level, and went higher. So you're not in a trend. I'll say if you hit 2 of these fractal bounces or fractal break bounce, you're going to be very good trades if you can get 2 of them. All right. So it doesn't happen all the time, but it's one of the major moves to look for. And it's a S wave. It's called an S wave trade. And I'm not going to get into it yet, but I'll show you that. Let's end the replay thing. And let's go to where we are now. All that I just told you is leading up to what I'm getting ready to talk about now. It's why I believe what's going to happen with the market is because of what I just showed you. I just showed you these fractals, how the market likes to bounce on it. I'm showing you this current fractal level. All right. This current fractal level starts. Let me move some stuff off the table. We don't need some of this stuff. I want you to be able to see this clearly and understand exactly what I'm doing and showing you and why my analysis is what it is. My analysis is what it is because see this fractal right here where I have this blue line? Let's make it, and then there's another fractal right here. Since they're so close, and this fractal is within this zone, this fractal ends, or this new fractal made a zone here. So let's move this up and make it a full zone because we have a wick right here. So we're concerned with this fractal, this one. But this one is right next to it, so price could drop a little lower. And if it did, it would bounce on Kijinsen because Kijinsen is pretty flat with that fractal level. All right, so therefore, we're looking for the market to bounce in this area. So here's exactly what we're looking for now. Everything's played out like we think it should be so far. So the market moved higher. This is the correction. This is the area where we're looking to trade. And then we're moving higher. So where are we going to move higher to? We're going to move higher to either the NT value, the V value, the N value, or the E value. These are all Ichimoku Price Observation Theory levels. Let me get rid of that. Then the thing is, and even if I think the lowest we could drop is to this zone and maybe a tiny bit lower than the zone. So if I would think like down here somewhere is where the market probably wouldn't go any lower if we were going to maintain this move. Okay. And that's where I would look for this. And now if you're thinking about Fibonacci retracement levels within a 26 period move, you don't even need Fibonacci retracement levels because this level right here, which is your Kijinsen, is always going to be a 50% retracement. Let me show you. Let me clear what I just put up here and let me show you that. I'm getting deeper than I need to, I guess, but I start talking about stuff and that's the way I do. I just want to explain it to you. And you may already know this stuff, but who knows? So this is the move. What's going? Let's move this up right here. This is the move from here to there. And I said it's going to be a 50% retracement where Kijinsen is. Where is that level? Right here. 50% retracement right here goes all the way across right there where Kijinsen is. So therefore, I do not need to put fibs on my chart because the two main levels are going to be your 38.2 and your 50. If you only retrace to the 23.6, you're in a powerful trend to the upside. A normal trend retraces back to like the 38.2 and the 50. But if you only retrace to the 23.6 and you move higher, guys, that's a strong trend. You're in a strong trend, okay? So we don't need those on our charts right now. And we just look at that. And even if I didn't have Ichimoku on here, my analysis would be like it is right now. This is what I would do. This is what I would look for. I don't need Ichimoku on here to tell you hey, there's a level here, a main level here that we're looking at, the market bouncing on and moving higher and moving up to these levels. That's not all Ichimoku analysis. That's basic market analysis. So when I add Ichimoku on here, it tells me bias, directional bias. We already see the directional bias because when you break bull fractals, that's the way the market is moving. When you usually break bear fractals, that's the way the market is moving. As the market moved down, we were breaking these bear fractals. We barely broke any bull fractals. We didn't break any on this move to the downside, except here we did. Right, so this from here to here, we didn't break any bear fractals, and then we broke any bull fractals. Then we broke here, but then we continued to move to the downside because we violated a bear fractal. So we were in between two fractals, and then we finally went to the downside. So the market laid out here. Now what I have down here is cumulative volume. It's not coming in play right now, but it's a very good indicator to have on your chart because what it's going to help me to find is divergences and also strength in supply and demand. All right, so when the market's pushing higher, we have stronger demand. When it's dropping lower, we have stronger supply. And this helps you to see that. And this indicator here is using Heikin-Ashi candlesticks to paint the cumulative volume. All right, so that's very good. But again, looking to get into this level here. Once we get to this level, somewhere in this area, we're looking for price action to turn this thing around. Once you see a nice price action rejection or reversal signal, then I think this is the area that you're going to look to get into the market. I think your targets are going to be here. This is, first of all, you always have to get past the 2 level. So when I talk about the 2 level, always remember that the 2 level is when we talk about a wave. 1, 2, we get in the market at level 3 always. All right, 3 is always going to be one of these levels that we're talking about, Fractal, Kijinsen, Cloud, or something like that. This is always your 2 level, and then we're always shooting for 4. You never want to get into the market at the 2 level for a couple reasons. First of all, you've already extended the move. And then second of all is this level becomes a fluctuation level. Sometimes this is fluctuation where we hit this level and we can't break through. And that's why we don't want to trade there. And plus we're farther away from support our resistance levels at that point. So I see the market changing direction back in this area, somewhere in here. And then I see us pushing up to this level. 1. So you need to get through this level, which is going to be 44.8, which also is the all-time high on this asset. And then we definitely need to get through that point. Now, when we get up here again, if you get another top up here, you double up here, make sure you don't have divergence in your cumulative volume, because this is going to show you what the strength of the move is based off of the smart money, based off of institutional traders. You'll be able to see if institutional traders are with this move higher or not. All right, so if you get up here, double top up here, but this indicator, this cumulative volume is still dropping while you hit this upper level, I might take my profits at that point. All right, because this shows me the smart money is not with this move to the upside. We have bearish divergence. The smart money is not buying the market at that point, okay? So think about that when you get to that level up at this point. When we hit this level twice here, we started to see our candles got smaller with them. Your Heikin-Ashi candles got smaller here. Your cumulative volume started to show weakness in your demand. And then finally a little bit of supply kicked in. All right, and then you can see where we are. Now, we want to see the market now give us that move to the upside. We get that move to the upside, we shoot for these values. I won't go much deeper. I won't explain these levels a lot, but they are Ichimoku observation theory levels. So Ichimoku has 3 theories: wave, time, and price observation theory. This theory right here is observation theory, where it shows us our targets. All right, and I don't need Ichimoku on my chart to find these targets. Again, I showed you how I found them. And a way for you to always find this end value, if you want to know where that level is, here's an easy way to do it. Because it's just a one-to-one measured move. You want to always know that at least. So just take your trend-based fib extension tool if you're trading with TradingView. Go from the low to the high to the mid-low. And that's where your end value is. Now, I got this level marked from the bottom here. So my end value is going to be the one-to-one level right here. So that's always going to, so if we're right here, this end value is going to be this level right here. So wherever I move this and stop, so if I say the market's going to stop right at the bottom of that zone, then we're going to shoot for this end value at 52,801. So currently this would be a level that I shoot for. So let's move this end value down because I'm taking it from the bottom here. All right, I took it previously from here. I'm taking it from there. And that's going to be my main level. Let's keep the E value right here. Let's get rid of the V value. We don't need it. It's real close to NT level, so we don't need that. I mean, it's real close to N level. And the NT level, we could keep it, but we don't really need to have this on our chart ever because usually NT is near the 2 level. So I don't need to know that. I just need to really know my N value and my E value. And those where they are. Right. This is where they are right now. All right, so. Oh, what the heck is that? All right, so anyway, let me delete this off my chart and then we'll end this session here. But again, so these are the targets I'm going to be shooting for. Basically, we want to get at least to this top, that's 44.8. All right. And we're looking to get in our trade in this area. I'm not going to say exactly where you're going to get that trade, but somewhere in this area. All right. And then we're going to see that move to the upside. We still have strong N waves to the upside. So there's no sign of weakness here. There's no sign of divergence. There's no sign of smart money not following the market either. So therefore, I think the move higher will go. That's why I'm saying we're going to explode to the upside. Then I'm going to shoot for at least 44.8. Then if we can get through that level, shoot for your N value at 52,639. And then finally 65,257. All right. So that's why I said the atom bomb is ready to explode. You just seen it. Get ready because it's about to explode. All right, guys. So hopefully that helped you out. And I'll be doing more of this analysis. If you have any pairs that you really want me to talk about, just put it down in the video comments. And let me know if you like this content, and I'll keep pushing it out to you. I haven't been doing a lot of crypto analysis, but I want to do that for you guys. And also, I have a weekly session that I just started. Put the first video out yesterday, but every Friday I'm going to be doing crypto analysis, and I'm going to give you analysis just like this on every crypto pair that you want me to talk about. So if you have one that you want me to talk about, again, put it down in the link here. I mean, in the comments here, and then I will talk about it. And also, guys, don't forget, please. If you want to see this content all the time, just let me know. Also subscribe, hit that button, get notified, and you'll know when I put the next video up. But guys, hopefully this helps you out. And until next time, guys, have a great one. God bless. So long.